My name is Eddie Topic. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and also aluminium. We'll start with LME 3-month copper. An interesting pattern yesterday. A third bearish black crow overall, but within the last 2 days we've had what looks like a bearish harami, yet within a larger bearish action. What this type of pattern is known is as a 2-day homing pigeon pattern. Now, homing pigeon patterns are traditionally seen as bullish reversals. However, data suggests that their action is more of the opposite, as a bearish continuation pattern. The question therefore is, will the market follow tradition or the data? An interesting one, that. Looking beyond that, I've mentioned many times how this market is in fairly free territory here, bar some congestions between roughly the 8,800 level and the $10,000 level. I'd also pointed out how it pays to watch the congestions nearby at 9160, 9305 and 9605, and more recently the very important GAN number of 9,000. Well, yesterday the 9160 level capped the market on a closing basis, and the GAN number at 9,000 held up as support. Please note, we have congestions further down at 8766 and 8698, but the only bigger supports show at the combination of the recent 50% Fibonacci line, the April 2012 high at 8661. So far today, a slightly higher open, but the market chose to test on the downside to the very recent lesser 38.2% Fibonacci line at 8887 before rejecting it and moving back up. A somewhat surprising rejection, as though I had this level marked on the daily chart here, I really didn't think it would stand up that well to any form of attack. It's interesting. We're now warily, it seems, approaching yet again the overhead resistance at 9160. LME 3-month aluminium. A second bearish black crow yesterday and a follow-on to the previous session's countering bearish black Maribozo. The market had tried up to the previously mentioned overhead resistance of the August 2018 high at 2178, but failed to make anything other than a breach, falling away down to the congestion in between 2080 and 2110, notably halting at its low for the day on the combination of the old gap, since filled in, of the small 2100-2106 gap from October 2018, and then closing back up just over the important 50% Fibonacci line of the big old 2011-2015 move at 2119 at the top of the congestion. There are now questions on this rally made in February. So far today, a seemingly large rejection of the combined short moving average and the 50% Fibonacci line. They were both again breached today, but prices have since risen up smartly, such that right now the action looks like a possible bullish double. Keep an eye on the August 2018 high resistance at 2178. That seems reasonable as the next obstacle topside. Thank you for listening. The short version broadcast essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final bit.